All right, all right, all right. Live and direct, like we are every Monday at 6 p.m. Pacific Standard Time. Live Q&A. Ask any questions you'd like of a mortgage broker who deals with hundreds of clients, thousands of clients every single year, deal with hundreds of real estate agents on hundreds of deals, and I'm happy to give you any insight, anything that I might be able to impart on you that's going to help you, no matter if you're buying a single family in Tennessee, you're buying a multifamily in Florida. No matter where you're at, good mortgage advice is always useful. And I think that today's episode, I'm going to try to do what I can to help people avoid dealing with crappy mortgage companies, dealing with low budget loan officers, something that I'm cleaning up a lot more messes nowadays than I ever have before. I had a conversation earlier today where I was talking to somebody who was just getting really bad advice from their current servicer, who happens to be Freedom Mortgage, and not a company I'm very fond of. I had a loan that was being serviced by Freedom Mortgage in the past. So as a consumer, I had literal experience dealing with this company. They weren't very good on a bunch of levels, and then confirmed by different horror stories I've heard from clients. Today's conversation with a client I had that was, they originally told me this, and then they said, oh, no, that was based on an FHA loan. And then they told me this, and then it was going to be no costs. And then I noticed costs, and then it was going to be, we don't need an appraisal. And then things changed. And that's the kind of stuff where you usually, as a consumer, can sniff out, like, this doesn't sound right. I don't think I trust this person. And unfortunately, in the mortgage industry, there's bad seeds, and there's bad seeds on multiple levels. There's bad seeds on the loan officer level. There's bad seeds on the management level, and there's bad seeds company wide, right? There's some companies that just want to get as much to their bottom line without any regard for the consumer, without any regard for if they're truly serving people. And I see this all the time, because if it wasn't the case, there wouldn't be these call centers that were built to basically call on every single person that has a mortgage and try to talk them into a transaction where 80% of the time it doesn't make sense. I talk to people every day. This specific one that I'm talking about earlier, I had two conversations today. Both people disgruntled with their current lender. One, a refinance with Freedom Mortgage. A second, a new build purchase with Loan Depot. And in both, like the refinance case, the loan officer was saying, oh yeah, this is going to be so easy. You're just going to sign these documents. It's no cost to you. Don't worry about a thing. We're going to save you this much per month. And was showing this low mortgage payment. Had the client convinced that they were going to lower their payment and show them savings with the same interest rate that she already had. Granted, they were taking off a mortgage insurance payment, but in order to do so, they were like inflating the price $50,000 above what she knew it was worth. It was all kinds of bad. Anyhow, that's the kind of stuff I want people to avoid. That's the kind of stuff that if this channel does nothing else but help consumers avoid shady loan officers, shady loan companies, then my job here will be done. I put out something to my whole client database last week because my phone was ringing like crazy. My mailbox is still full of loan offers. And when there's mass mailings, mass calls, mass that stuff, rest assured they're casting a big enough net where they want to just pull everybody in and see who is willing to come to the finish line with them, without taking into account, like, some people are going to save and be served and a refinance makes sense. Other folks, it is really detrimental for them to enter into a refinance transaction where they're going to spend a bunch of money. The mortgage company is going to make money. The only person benefiting from it is the people doing the loan, not the person on the other end, right? So anyhow, that's rant over. I'd love to get into some Q&A. I'd love to just have people throw all kinds of questions at me. I doing my best to try to do. What I'm going to do is have these lives bookmarked, right? And I don't know if anybody knows if there's a company out there that does that, where I can just pay somebody to sit in here and watch for an hour and a half and say at 1 minute and 54 seconds, he talked about shady loan companies. At 6 minutes, he talked about removing mortgage insurance. At 9:30, he talked about when you lock your loan with a new bill, whatever the case may be, right? Like that's something I think would help. Then I could add things in my title and people can search for information without having to sit through, a full live to get their questions answered. Joey, good to see you here, brother. Hope all is well. It is true. The course is recorded right now. The only place you can find the Mortgage 101 course is inside of Mike Zuber's One Rental at a Time course. It's an investing course for real estate investors. If you're interested in investing at all, I encourage you to go buy his course. I don't get a single dime from promoting that or saying that. I just like the guy, like what he's doing. We talk every single Wednesday, and on his channel, you can see, 2 to 3 videos a week that we put out as a collaboration, talking about mortgage, trying to communicate all I can, educate as best I can to his community and to his followers what I see going on in mortgage and real estate. And so by mid-August, I'll have an intro recorded and it'll be available on Teachable. Joey, you let me know what the price you want to pay is, and I'll put it out that price. It's going to be $197, and then it's going to be discounted to whatever I feel like I want to discount it to for however long I want to discount it to, and then I'll just leave it up at $197. It's going to be one of those things where I'm not worried if it sells 1,000. I'm not worried if it sells 4. I'm just know that there's good content in there. The people that purchase it are going to see value in it. If you don't, per Streamable's agreement, I think you can get a full refund. So nothing to lose, right? Mona, thank you for joining. I appreciate you. Thanks for referring over your California friends. My team is awesome. You are correct. And I can't take any credit for that, except for that I try to create an environment where we're all having fun. We're all serving people. And that feels pretty good. Honestly, when you're doing good work and you're serving people at a high level, that's about as rewarding as it gets. And so, I appreciate the feedback, and I'll certainly pass that on to the team. Let me see if I can quick snapshot. I'll send this. I like sending good positive stuff to the team. Last week we had somebody that closed. I took a quick picture of that on the screen, sent it to the team. Good stuff. Thank you. All right. Andy's got a question about buying a house. I'm buying a house and locked it in about 15 days ago at 3.3. Supposed to close on the 20th. Can I ask to get the current rate, or am I actually locked into that rate? Unfortunately, in your case, if rate's better, you're locked into that rate. And that's the thing about locking, is that you're protected against the market getting worse and the rate going up. So that's a good thing. But you're also in a position where if rates get better, you can't just say, oh, never mind. I take backsies on my lock. I want to lock at the 3.15. I don't know your loan to value or your credit score or any of that stuff, but being 18 days away from close, everything else lined up, I would not mess with it. If you got a new build and you're not closing for 2 months, maybe you even see about taking the loan somewhere else. But I'm also not a big proponent of picking your loan up, moving it to another company after somebody's helped you and got you this far along. So I guess the short answer, Andy, is once you're locked, you're locked. Good news is if rates continue to downtrend like we've been seeing them, maybe in 6 months or 9 months from now, you'll be refinancing at 2.5% or something. Who knows? Jennifer, thanks for joining us. Good to see your familiar name in here. You've got a couple different questions. You're asking about today's mortgage rates. And you know what? I was doing a bunch of stuff working on the business today. I wasn't working in the business. So I don't even know like what that would be. I'm just going to look online where, you can kind of get a feel for, man, dude, I take back what I just said. Going online, you find some of the most ridiculous information ever. Like, 299 at a cost of 2 points. That is crazy. Like, that's nowhere near where rates are at. Then you've got somebody else advertising a 2.375, but it's up 1.6 points. You never want to pay 1.6, 1.8 points. God, online is just such a jungle. There's just such crap online. So let me see. I know there's a good website that what the heck is the name of it? Is it Mortgage News Daily? I think Mortgage News Daily has like a daily rate survey. There we go. If you go to mortgagenewsdaily.com, look over on the right, daily mortgage rate survey. It does like a, what would you call this? A survey of a bunch of different lenders. I'll show you what it looks like, Jennifer. Share screen. Boom. And over here on the right on mortgagenewsdaily.com, this gives you a good idea. This rate is going to be with no points being paid. On a 30-year, 2.8. Yeah, sure, I've got some lenders where it's probably closer to 2.7, 2.65. But this gives you a rough idea. And when it says like negative 0.04%, that means it's come down from 2.84 to 2.8. A survey of, survey in air quotes, meaning they've talked to or surveyed 100 different lenders. I don't know what it exactly is, right? But that's that gives you a good, barometer for just about what it's at. Stop sharing. Okay. Hopefully that helps, Jennifer. Oh yeah. And what is tapering by the feds? A quick 30-second layman's terms tapering by the Fed. The federal government is buying they're buying mortgage-backed securities and they're buying bonds. And what that does is it keeps interest rates low because there's not demand for, okay. I'm trying to, the Fed is buying like $60 to $80 billion a month in mortgage-backed securities, keeping interest rates low. When they start to buy less of those, they're only going to buy $40 billion a month or $25 billion a month or $20 billion a month. When they start going 40, 30, 25, 20, 15, 10 on how much they're buying in mortgage-backed securities, that's going to have interest rates increase. And the tapering is them slowly cutting back on their purchase of mortgage-backed securities. That's my simple explanation. If I butchered it, apologies. If somebody's got a better explanation, I'll give you the link. You jump on. We'll do it together live. If you're self-employed for more than 5 years, can you use the most recent tax return? Yes. Or do you have to still provide 2 years? Does the income have to be going in an upward trend? Are interest rates more? Great question, Nicole. Tons of self-employed borrowers. This comes up all the time. Here's what the guidelines state is, well, I submit a loan and I put all the information into our automated systems and it spits out approve eligible. And I've got something where I can submit it to Fannie and Freddie at the same time, right? I can see what the automated findings say on each one. This one says we need 2 years of tax returns. This one says only 1. This one says 2 months of reserves. This one says 0. And you look at those findings, a good quality loan officer and their team is going to say, hey, when we sent it to Fannie, Fannie's findings said 1 year of tax returns. And that's the thing. Fannie Loan Prospector LP has a rule in place where if you have more than 5 years of self-employed income, we can use just last year's tax return. And you're asking, does the income have to be going in an upward trend? Well, since we're only using 1 year, they're not going to see a trend either way on that 1 year. But what they are going to see is you're going to provide just 2020, and then they're going to want a year-to-date P&L for 2021. if 2020 was 80,000 bottom line, and then you've got a year to date of 22,000 through 7 months of 2021, that ain't going to fly. Lender is going to poo-poo that for sure. Or, if you're lucky, they're going to say, okay, well, we got 22,000 year to date through 7 months. We'll divide that by 7. We'll give you, 3,100 a month or whatever the heck that is. And so that's not going to do you much good, right? So I guess the answer to the second part of your question is yes, we still want at least a flat, as good as last year trend or slight decrease, but definitely not a huge downward. We don't need to see a huge upward either. Are interest rates more? No. The interest rates for self-employed, for W-2, for all those borrowers is equal across the board as long as you qualify. Yes, John, we can talk about mortgages for investors that require less than 20% down. It's going to be a short conversation. FHA on a multifamily, that's kind of like an investor loan, right? Because you live in one and you get to rent out the others. The only real mortgages where you can put less than 20% down as an investment is if you're putting 15% down on a single family home, and I'll tell you the pricing is absolutely trash. Probably don't want to do that. Or if you buy a second home with 10% down and you can rent that some of the time. But there's not a lot of mortgages for investors with less than 20% down. The pro tip here is move out of your primary into a new home and make the old primary an investment property. That way you can buy your new primary forward with 5% down conventional, and you've just turned your old one into a investment property. And now you're not, having to outlay 20% to get into an investment property. Frustrated cowgirl. Hopefully you're not frustrated with the mortgage process, because hopefully it's frustration with something else. Cowboy's not doing things right. But as pension being the only income, it's straightforward. It's just like any other income that you're using to qualify for a home loan. We're taking the income on one side and the debts plus the mortgage on the other. So if the pension's $3,800 a month and you've got no debt on this side, we'll probably be able to qualify you for $1,600 or $1,700 a month mortgage payment on the debt side. It's a debt to income ratio similar to if you worked a day job that made $3,800 a month. We're just using the pension as the income. Del J, shoot me a message at matt@mattthemortgageguy.com. I'll figure out what's going on. I used the mortgage broker from Matt's website, but the broker I got did not provide a loan estimate even after I submitted all my documents. All right, we'll look into it, brother. I'm sure there's good reason for it. And just shoot me an email, matt@mattthemortgageguy.com, and we'll find out what's going on. I don't know if it's a refinance or if it's a purchase. If it's a purchase, can't necessarily provide a loan estimate because you don't have a property or whatnot to spit it out. But we'll figure out what you're looking for and how we can assist you there. Jennifer, I appreciate you. Hit the likes. I like that. You correct yourself to say like, but I like this. Hit the likes. Hit the likes. I don't even have YouTube pulled up on my other screen, so I don't even know if we got 1 like or 50. However, whatever we can do to up the likes. It's good for the algorithm. Joe Ibrahim. I locked my rate for 37 days now, and I haven't closed. What's going to happen at this point, and how much it's going to cost me to keep getting an extension? Talk to your lender to find out when it's locked until. Maybe you've got a loan lock that's due to expire on August 4th. Every single lender has a different lock extension policy. With a lot of lenders I work with, some of them give me a free 10-day extension. Some of them give me a free 5-day extension. Some of them don't do any days. Some of them I can extend for a full 30 days for 10 basis points. Some I can get a free 30 days on some circumstances. If it's a lender issue where we're holding up the process, I'll usually eat that 10 basis point cost. for those 30 days. If the client, for whatever reason was slowing up the process, and you had to do a 30-day extension because you couldn't get docs together or whatever, 10 basis points isn't a lot. If you have a $300,000 loan, 10 basis points is $300. It's 1/10 of 1%. So shouldn't be too expensive. So talk to your lender though, for sure. You don't want to let it blow the lock. That's for sure. All right. BOJIM. This is good information for people. This is exactly, dude, did I not tell people this? Like, you just talk to your servicer and you say, offer me something. I'm leaving forbearance. And they say, okay, BOJIM, how about 40 years at your current rate of 2.875? And, your payment goes down by, there's no way. It went from 2,100 to 835. 835 can't include taxes and insurance. But this is what I've been telling people. No documentation, no fee. And here's the thing. You need to make sure you promise us to come back and report on this. No credit implications. Because I've heard it both ways. I've heard some people say, well, during these 3 trial payments, that's going to show up as this or show up as that. I don't think so. I don't think it's going to hurt your credit. I hope it doesn't. But I would, follow up with us, because this is a good stuff, right? Just stretch that baby out to 40 years. Just make sure with all that savings per month, you do something wise with it, right? Invest it. Do something. Because otherwise you're stretching out this loan and paying more interest for no reason. If that $1,200 a month just gets blown at the casino. You know what I'm saying? I got faith in you. You're going to do good stuff. All right, Joey, you get on them. Until we get to 50 likes, you keep pounding away. All right, Eddie. Highest DTI I've seen on a jumbo in California, 15% down. We've done a lot of 10% down, a couple 15%. Usually it's 10 or 20. I don't see a lot of 15% right in the middle, but I know that those are capped at 45. So I haven't seen anything above 45. Different lenders have different DTI caps. Some are 45, some are 43. I'm never going to see 50%. And I wouldn't recommend anyone buying and doing a jumbo loan, borrowing $1 million at a 50% DTI. I would not recommend that. All right, Nicole, on interest rate only loans, you have to qualify for the payment now and also for the new payment when the rate adjusts after 5 or 10 years. Usually, what Nicole's referring to is if you get an interest only loan where, rather than pay principal, interest, taxes, insurance, the whole kit and caboodle, you're just paying the interest only. So nothing's going towards principal to pay down the principal. Usually they're going to qualify you based on the fully amortized payment, they call it. Where if you were paying the principal, that's the payment they're going to use to qualify you for the loan, because they're not going to get you in a position where it's like, hey, right now your payment's $1,800 and you qualify just fine. If it went to $2,300, then you've got a 60% DTI. That's not a smart lending practice. And so the answer to your question is yes. Most lenders I've seen are all going to tell you they're going to qualify you based on what they call the fully amortized rate or fully amortized payment. Linda, I've been telling people, all you gotta do is ask your servicer. They'll give you a 40, or they'll stretch it out. Just join the chat with the moratorium lifted. Will we see a flood of multifamilies go on the market? And if so, do you think investors will scoop them up? I didn't see that, like, some people thought that this was going to cause this big sell-off. I don't know. I don't know if I see that happening, Zeta. I'm thinking in real time right now as an investor, as somebody who watches that space. In places like California, I don't think you can evict still, right? I think we're extended through September. And so I guess time will tell whether investors who are, some of my properties are breaking even, some of my multifamily stuff, some of my 4 units that were cash flowing $1,000, $1,200, $1,500 a month are breaking even or even losing money some months during COVID. So I guess, yeah, there is part of me that says investors like myself just say, listen, I don't want to break even. I'd rather sell this asset and take that money and go invest it somewhere where I can see some returns, right? And so eviction moratorium, gets lifted. I evict every, buddy who's not paying, clean it up, get good paying tenants in there and sell it at a premium. Maybe. I don't see that happening in such a big, like, mass exodus from multi that it causes like price corrections. And, to answer your question, if there was a lot of multifamily that all went on the market at once and a lot of people tried to get out of multifamily, I think there's enough demand that it gets scooped up quick and it doesn't, in order for prices to really fall, you need to have a bunch of people selling and nobody wanting to buy. I think there's plenty of people that want to buy, and there's demand behind the demand behind the demand where you can't go more than 10% discount before it all gets bought up. And then, it's not going to continue to go down because there's demand in place. Right. And so, I think, I think it's unlikely for us to see any major disasters in the multifamily space. Final answer. Joey, you already told me this, and I apologize. Garesi. Ah, man, you did it phonetically last week, and I already forgot. My memory is so short. I'll forget again, even if you tell me. So it might not be worth your time. What's your favorite resource to share with partners or significant others regarding real estate investing? I mean, if somebody who you want to get excited about real estate investing with you is into like audio stuff at all, I can't see how anybody can like listen to a Bigger Pockets podcast and not get excited. There's tons of different types of guests from different kinds of backgrounds. That was what really got me rolling at first, was just Bigger Pockets podcast after Bigger Pockets podcast. So probably that. And then, David Green has some books. Brandon from Bigger Pockets has some books. So any of the books kind of from their libraries. And what was one I read recently? I read a good one recently. Oh, gosh. You're testing my memory on a day where I've been at it for 12 or 13 hours. I'm exhausted. All right. I'll get back to you. Those two are good. One Rental at a Time, Rich Dad, Poor Dad. The Millionaire Next Door. That's a good one. The Richest Man in Babylon is oldie but goodie. I like Gary Keller's The One Thing. That's not necessarily a real estate investing book, but it's a good business book. I'll think of some more. It's funny when I talk to some buddies I'm in a book club with, and we're trying to decide on what book we're going to read. Like, I've read every single one, but if it's been more than 2 years, I've like forgot the name of it. I don't know. I gotta like ever updating processor up in my brain where it like deletes old stuff quick. Have you heard of the Sweat Equity USDA 502 direct loan? They offer here in Utah and can't decide if I should pursue. I feel like I heard something about that. The thing about some of these like really, what's the word for it? Obscure loans is it's gonna be hard to find someone who's good at them. Because if a guy who does 500 loans a year has never done one, chances are like you're gonna have a hard time finding somebody. What are USDA Section 502 direct home loans? I bet you these things are hard to get and hard to close. It looks like it's a USDA is only rural, so it's got to be a rural area. And then this looks like it's also it's for low and very low income families. So you got to have a really low income. And the problem with some of these programs is like, hey, you've got to make less than 14 cents a year, but then you can't qualify with that income to buy anything, right? And so if the income threshold is 44,000 and anything you try to buy is at least 250,000, then it makes it hard to qualify. Some of these ones, I remember on some of these programs in California, there would be a list of like approved lenders to do these loans. Working up a sweat with a self-help housing program. Huh. You got to build it? That's cool. USDA Rural Development, the loan. Okay, so you gotta be credit worthy, not make too much money, but have the ability to repay the loan, and unable to secure credit from other sources. What kind of stuff is that? Like what? This is the craziest thing I've ever seen. The repayment period can be either 33 or 38 years, and you can either pay 1% interest or 24% of your adjusted income. And then you've got to contribute 65% of the labor required to build the house. I don't know. Like, this sounds to me like it would be impossible to find somebody who does these, and even more impossible to like find a contractor who's willing to do some of the work, but you do some of the work. That's wild. All right. BOJ, I am 835 PITI. Not all thanks to my channel. You did ask for the option, so give yourself some credit. A clap for BOJ, I am. So they added the forbearance, the negative escrow. They rolled it all in, gave you a 40-year 2.875, 835 PITI. Sweet. I'm not going to take credit, bro. You just call the mortgage company and did it. But we'll take these next 47 seconds to remind everybody, if you're in forbearance and you're exiting forbearance, ask your servicer, what can you offer me? What else is there available? BOJIM did it. Past client of mine did it. A half a dozen people I've talked to off of this channel have done the same thing. You ask, you shall receive. Closed mouths do not get fed. Closed mouths do not get 40-year modifications. So ask your servicer if you are exiting forbearance. If you didn't take forbearance, then you're like me and Eddie. That's like, damn, I should have taken the forbearance. That way I'd be offered this stuff coming out of it. I feel your pain, Eddie. But for those who took it, needed it, and now exited, are able to get those great terms. This is what the government agencies are calling avoidable foreclosure. They are going to offer whatever they can do. They've come out in statements and they've sent bulletins to the servicer saying, offer different modification options. Do whatever you can to avoid foreclosure. It hurts families. It hurts communities. It's expensive. It hurts banks. We don't want it. They've made it super clear. They're avoiding foreclosure at all costs. That's why when anybody talks about a big foreclosure wave coming, they're out of their mind. Out of their mind. I can tell you with absolute certainty, when the power of the government and their money printer and their money printer is at work saying, we don't care how much it costs. We ain't going to let foreclosures happen. Foreclosures ain't happening. So, rant over, but don't depend on a housing crash because of a bunch of foreclosures, because it just ain't happening. Yep. I'm seeing a lot of that too. I'm looking at some markets that were absolutely piping hot. And I'll tell you, I'm in Sacramento and I'm about 2 hours from South Lake Tahoe, and then I'm 2 hours from the beach. So I just for funsies look at properties. It could be a vacation home spot. I could go have a vacation home in Santa Cruz. I could have a vacation home in Tahoe. South Lake, West Lake, North Lake, everywhere around Lake Tahoe has been bananas as far as the real estate market, going up a bazillion percent every year. I think I saw some crazy stat, like 70 or 80% appreciation in 12 or 18 months. I don't know if that was true or not, but whatever the case, stuff was flying off the shelves. And everybody said, you know, the folks in the Bay who can work remotely want to go live out in the woods. They don't want to be around people. They don't have to commute into their, you know, office job in the Bay Area anymore. So that's why they're buying up all the Tahoe real estate. And that's why the real estate is going crazy. I looked today, I saw 67 days in the market, 44 days in the market, 37 days on the market, price reduced, huge price reduction. So you can't tell me that we're not starting to see the signs of a cool down, a slowdown, whatever you want to call it, right? I'm not calling it a crash, and I'm not calling it anything more dramatic than it truly is. In March and April, it was effing bananas. And now it's not effing bananas, right? It's a little bit less bananas. And if you read what I'm reading in front of me right here in Northeast Pennsylvania, the crappy homes are sitting. The same thing is happening in my market. You can't list something for a crazy price because your neighbor sold a house that was nicer 3 months ago for 600. And now you think you're going to like put your house in the market for 640 and it's not even as nice as that one. You might not even get 600 anymore. So that's rant number 3 of the day. I feel like I'm on one today. I got some renewed energy and I got some passion behind some of these opinions, but yeah, all that to say, some stuff is sitting longer now. More inventory hit the market. And you can't just price it at any price and expect it to sell. Not happening anymore. Sorry. Are HELOCs hard to get for so-so credit around 680 with the bankruptcy a couple years ago? I've heard HELOCs are easy to get only for very good credit. They're not hard to get, but I think the bankruptcy might be an issue. I've looked into it for clients and I refer a bunch of stuff to a local guy that does HELOCs in my local market. And I think they might be like within the last 5 years, you can't have a BK. I'm sure there's some that do it, you know, and 680 is a decent credit score. That 680 shouldn't be a problem. The BK might be. All right. My guy, Joey Juresi. I nailed it, bro. Do you believe the eviction issues will affect the rates or the market? No, not in any significant way. Clearview Products. I bought a triplex to live in 2018 and looking to buy another fourplex to live in. Are there loans that will offer lower down payment amounts? On the multis, the only thing you can really do is FHA. If you bought the triplex in 18 and that was FHA, you can't use another FHA to buy the fourplex. If that triplex is conventional, you should be able to go FHA on the fourplex. If you're going to live in it, you probably need a pretty good letter of explanation on why you're moving out of a tri into a fourplex. Not like it's can't be done or not like it's not believable, but in general, you know, folks are not necessarily moving. Maybe it's in a better neighborhood. Maybe it's a bigger unit. Maybe it's, you know, something, but you just want to have a good reason because lenders are going to look at people who are buying multifamily owner occ and fine tooth comb it a little bit to see if it passes the sniff test, right? I've got people that claim to move out of a $1.4 million single family to go live in a $450,000 fourplex. Lenders don't necessarily buy that if you're picking up what I'm laying down. Arnold, thanks for joining us. Appreciate you having you here. Massachusetts, hello from Massachusetts. Oh, you're welcome. Last week we answered about leased solar panels, and yeah, that's my thing. If you have a question this week that I don't know, I've got a notepad in front of me. I'm going to jot down some notes. I'm going to talk to my processor. I'm going to get back to it. And that reminds me, Arnold, I should look at last week's notes. Somebody asked about the Fed. Can't remember what that question was, but moral of the story, if I don't know the answer to your question, I'll look it up. I'll get back with you next week. Yeah, it looks like you're going 20% down. So yeah, start saving. Put that lemonade stand up. Make that money. You do the 20% down. Hey Dan, thanks for joining. I'm gonna definitely give Zuber some crap. I'm actually gonna text this to him. I'm gonna tell him that he's got to learn how to put it. Does he do it from his? I wonder if he does it like from his phone or something. He's got some bad internet where he's at, so maybe he doesn't do it from his laptop, or maybe he does it from a different. I do it out of StreamYard, and it's so easy. Even a dummy like me can navigate StreamYard. I was trying to use other things for live stream, and then somebody turned me on to StreamYard, and now I'm all StreamYard all the time. My buddy Jason Walter, what's up, brother? I'm trying, man. I'm staying fresh, and I'm staying sharp with everything mortgage by answering 67 questions every Monday. This is how I keep from forgetting all the mortgage knowledge that's gone into my head. I refresh myself every Monday. This is my refresher course, but I disguise it as a live Q&A for the people. But really, it's my continuing education. So if anybody doesn't know about Jason Walter and his channel, this guy does a lot of stuff in my market in Sacramento. Talks about real estate, talks about forbearance, talks about all things around real estate, finance, and the like. So give Jason a follow. Go check out his channel. If you like my stuff, you'll love his stuff. Thanks for stopping in, Jason. Thanks for saying hello. Are you subscribed to the channel called Reventure Consulting? I'm not, but that's probably a good idea for like a collab, right? Reventure Consulting. There's so much good stuff on YouTube. I every once in a while find stuff where I'm like, man, this is straight gold. You know who I ran into and I just binge watched it all weekend was that Formazi guy. He's got the company that he helps gyms scale. Now I got to find him. On here. I think it's Formosi. Something Formosi. Saying that wrong? All right. Bear with me while I go into my history of watched things. There he is, Alex Hormozi. He owns a company that basically scales gyms. And this guy, all of a sudden, he's got like 1,000 subs a day. And everyone's like, oh my gosh, this channel is growing like crazy. He starts showing up in my feed more and more. And then I watch 3 of his videos and I'm like, yeah, this guy's channel is exploding because this stuff is friggin' awesome. So check him out, Alex Hormozi, Hormozi. And I'm going to check out Reventure Consulting. All right, Joe, you can re-ask it. That's the thing about being on here for an hour and a half straight is if you mess up your question, you can answer it again. My rate has been expired for 35 days and I haven't closed. Is it worth it to continue or should I look for another lender? they should be, after it's been expired for more than 30 days, you should be able just to resubmit the loan. If it's within 30 days of expiring, then we've got a problem where we got to go worst case pricing. I talk to that lender and see what your options are. And if those options are much worse than like today's rates, maybe you got to shop elsewhere for that loan. But chances are the current lender you're using, they have all your stuff. They might be able to resubmit. If it's been expired for 35 days, most lenders I work with, if we're 35 or if we're more than 30 days from it expiring, we can resubmit the loan and we're good to go. I don't have a link for copy for you, Liberty, but I can do this. Bear with me. There it is. Alex Hormozy. Oh, you found it. All right. Never mind. You beat me to it. All right. Dan wants to know Giants or A's fan or Warriors. I grew up in Sacramento. My grandma had season tickets to the Sacramento Kings. So ever since the Kings landed in Sacramento in 1985, I've been a Kings fan. We got robbed in 02 and 03 when the game was fixed. Lakers got all the calls. We should have won the NBA championship that year. I'm not mad about it, but I'm now, instead of a 5, 6, 7, 8-year-old kid going with grandma, I've got my season tickets to the Kings. I take my boys. And so I like the Warriors. They're, a team that's right around the corner. So I can still root for them being a NorCal team, but I'm a big Kings fan, and basketball's my sport above any other one. And so when you ask A's or Giants, when I was growing up, I liked both teams. I liked the Bash brothers. I liked Will Clark. I liked all, the players on both teams. Probably leans towards Giants, but if I were to choose a sport between the two, definitely basketball, definitely Sacramento Kings. I was considering a free cash out refi via forbearance partial claim versus a low closing cost HELOC. Looks like I'm going with forbearance due to the BK. All right. This is funny because I think I talked about this in a prior video, and basically the new cash out refinance is just entering into forbearance. If you want $16,000 out of your house via cash out refinance, skip the costs of refinancing with the lender like me and just go into forbearance for 6 months. And then you save 6 months times 2,000 in payment. You got your $12,000 cash out. It really is the new cash out refinance, is entering into forbearance and not having to pay your mortgage payment for 6, 12, 18 months. As bad as that sounds, they don't require anything to enter forbearance. And so some people need it, and some people, I'm glad they're taking it. Other people are using it to their advantage. And I can't necessarily say I blame them. There's worse things going on in the world than somebody putting their mortgage on pause and then slapping that balance on the end of their loan. So, yeah, that's something that if you can't get a HELOC because of the BK, you might have to just go into forbearance. Okay, this is a good question. I guess what you're asking is a lender's offering a lower rate without charging points than a broker using a wholesaler. If I'm a broker and I'm sending my loan to a wholesale lender, know that all of them are priced differently. And so if you're talking to a lender and they're saying, no, we can offer 2.5 at no points at all, either they're baking costs in somewhere else and they've got admin fee, underwriting fee, and all that, or there is a chance that they're operating on, thinner margins. They don't have licensed loan officers, or they have very few of them that are handling hundreds of transactions. Some of these online companies, I'm not going to sit here and tell you that like I'm going to beat them on price every single time. But what I can tell you is if you're using some no-name online lender that's $400 cheaper than a local mortgage broker who you get to talk to and has an amazing team that's going to help hold your hand and make sure you get to the finish line in 27 days, the $500, $600, $800 you might save for that same rate with an online lender who has horrible service. Day in and day out, I talk to people that spent 3 months in process with an online lender. That is a special kind of hell that only the people who have gone through it can attest to and swear to never do again, right? But I know, because I talk to people every single day, that there can be, it can be alluring, right? You talk to somebody and I'm like, listen, 2.625, it's got a $400 cost, and that's about as good as it gets. This is the best of the best. A lender I like and trust. I know it's going to be an easy process. We're going to get this thing done quick. That's probably 0.25% better than the retail lender, 0.25% better than the credit union or the bank. But there might even be somebody even cheaper, a no-name company I've never heard of that might be, either new and trying to gain market share doing loans for free, or whatever the case may be, right? They're a little bit cheaper. Their rate's slightly better. It might take them 3.5 months. I think somebody reached out to me last week sometime and said, what do you think about this lender? And I said, I never heard of them. I Googled them. I literally read 50 reviews in a row that were all 1 star and all said, I quit after 3 months. I quit after 4 months. Worst lender ever. Couldn't get anyone to call me back. Got my appraisal done in March. It's still not closed in June. Like, just horrendous. And so that's what you're going to find when you find the very cheapest rate. If that's what somebody wants and they want to drag themselves through the mud for 3 months, that's their business. If they want to get a very competitive rate with an amazing team, that's my business. Dan Hunter asked the question, does an active forbearance affect getting a new investment loan? The answer is absolutely, positively, yes. If you are in forbearance on any of your mortgages, whether it's your primary, another investment property, or anything that's tied to you and your credit, you are not going to be able to get another home loan. I've got a lot of clients, and I was chatting with one last week who's in active forbearance on an investment property of his, trying to buy a new primary. You have to pull yourself out of forbearance. You don't have to pay back the past due. You can simply attach that to the back or disposition it however you agree to that with the servicer. Hey, we're going to tack that on the back. I'm going to continue paying. I'll start payments again on September 1st, but you have to be officially out of forbearance to be able to close on a new loan. That's across the board with all lenders. Some lenders want you to be out and then make 3 payments. Not all lenders. Some lenders, you're just out and you're good. It's sitting on the back. VK, first time home buyer. All right, buckle up, Buttercup. Are there any special mortgage options to save money? Yeah, the mortgage option to save money is low interest rates, and they're smoking hot. Here's what you asked inside of that question. You disguised it. Well, no, you didn't even disguise it. You just said, what is there for me? I'm a first-time home buyer. As a first-time home buyer, you can put 3% down on a conventional loan. So that's good. That's an option made available to you being a first-time buyer. What a lot of people are looking for is down payment assistance, or they're looking for like that $8,000 first-time home buyer credit. None of that really exists. In 2021, home buyer down payment assistance programs, at least the ones I see in California, are a big, like, okay, let's talk straight to each other, because we're here to get straight, real answers. It's a big pile of poop. and then it's wrapped in this fancy wrapping paper. And then they put a bow on it and they say, here, first time home buyer, this is for you. This is assistance. But then you unwrap it and it's a steaming pile of poop. And you're like, why is this a steaming pile of poop? It's like a payday loan. If the only way to pay your bills is to borrow $600 from a check cashing place that does payday loans and charges you 27%, and that's what you want to do, okay. I mean, that's the only way you could pay your bills. I would suggest borrowing money from a family member to pay your bills, and then you can pay them back. It's going to be a lot cheaper in the long run. The down payment assistance programs, in this drawn out analogy of mine, are more expensive. You put a second and a third on the back of your loan. I get really frustrated when somebody comes to me and says, I really want to refinance. I want to lower my rate. I know rates are low. And I go, okay, unfortunately I can't, because the lender or the program you use to buy your house, you put a second and a third on there, and you got all this down payment assistance that sounded great because you only brought $2,000 to close, when in reality, you owe 105% of what you bought the house for from day one, and you have a higher interest rate that you can't get out of because your LTV is too high to even refinance out of that. Long-winded way of saying, do a 3% down conventional or a 3.5% down FHA, get gift funds, do anything you can to avoid using down payment assistance. If that was not even close to your question, I apologize. That's just where my brain went for that. The best thing available to you right now is super, super low interest rates. Thanks. All right, Dan, this is what Dan wants. He wants me to log on. He wants me to price it out. Everybody's like, rates dip today. You got to realize that when rates dip, like we saw earlier in the live stream, I went and I saw like the average of all the lenders, 30-year fix was like 2.8 versus 2.84. So it's not like it's a big dip, but it's a dip, right? Dan Hunter. I'm typing your name into my pricer. And we're going to do $400,000 purchase, 25% down, investment property. That's what you're looking for. Purchase. I know you're the type of guy that's got a 760 credit score, Dan. So that's what we're going to do. My guess is it's about 3.375. Oh my gosh. 3.370 on that scenario. Not an offer to lend, NMLS number 1088993, just a guesstimate. What else can I say to get myself off the hook for any here we go. Here we go. All right, Dan. This is it. Wow, is that blinking for everybody else? Look it. Don't miss it. Don't miss it. That's weird. What in the world? Stop. I'm going to try that again. Whew. Gave me vertigo. Now we're good. Okay. So this is your $400,000 purchase, $300,000 loan amount. So 25% down. 3.37 is par. This is the price down the middle. Par, meaning zero cost. 13.25 is the principal and interest. If you want to pay about a third of a point, pay $1,000, you can get 3.25. Now pay 2,000, it's about 3/4 of a point. You get a 3 1/8. Want to pay a little bit more than a point? Get a 3%. Pay 1.5 points, get 2.875. Pay 2.2 points, get 2.75. This is something that I went over in my course, where you can have whatever rate you want. You know, buy an investment property, get a 2% interest rate. You just got to pay 6.9 points and 20,000 up front, which you'd never do, right? The rates that make the most sense are going to be right in here, between 3 1/8 and 3.370. You pay 0 points, you get 3.370, 13.25. This next rate down, 3.25, it saves you $20 a month. and it costs $1,000. So that's easy math, right? That's 50 months. You might do that. I mean, it's going to take you 4 years to break even. Another $20, you spend another 1,100, so that one's a little bit, it's the law of diminishing returns as you're going down this rate sheet. This is what they talk about when they talk about rate buy down or paying points. This column right here is the points you're paying and the cost for buying the rate down to this rate. This is a rate down the left column. This is the cost for that rate, points. And this right here is the principal and interest. You're probably going to want this. You might say, I'm keeping this. It's a buy and hold forever. Maybe I'll buy it to 3 1/4 or 3 1/8. Once you start getting into here, your returns are being diminished. 299 is probably the lowest because then you start paying a half a point. Then you start paying $1,500 for that $20 in savings. That's a longer break even. So hopefully that was helpful. That should answer your question. All right, stop sharing. All right, I'm back. Whew. I know. Sorry, Caden. I was about to get a seizure too, I think I got a headache. All right, where did we go? 2% this year? I doubt it. But like you saw, you can get a 2% right now. Just pay 20 grand for it. You probably don't have to pay that much for owner occupied 2%, but to be 2% with no points being paid, I don't personally see it, but I've been wrong before. All right, we found a seller who's not ready to sell until next spring. What should we do? Is there other houses that are close to this house that might be your dream house too? If you have like a super aggressive gangster real estate agent, they could send out something to like every similar house in the neighborhood and be like, who's wanting to sell in the next 3 months? I've got a buyer. I'll write something up today. I'll cut my commissions. I'll represent both sides. Let's do it. And, with that type of go get them, maybe they can find something off market that's as good or better or similar to this dream home of yours. And these folks are like, oh shit, what happened? We thought we had a buyer. Now we're SOL. But yeah, besides that, I don't know. Yeah, I don't know what you could really do. I'd look for something else, or, you can't really offer them rent back for that long because lenders won't allow it more than 60 days. Like you can't close a loan with us and then rent it to them for 6 months as an owner occupied house. So, yeah, it's a tough one. I'd find something similar and have an agent who's a go get 'em type of agent go out and hunt for it, actively hunt instead of sitting back and waiting. All right. What's the highest DTI you're seeing get approved right now? Heard they changed it from 50% to 43%. There was never, I shouldn't say there's never. Basically, when you submit your loan into the automated system, it spits out an approve eligible. That guidelines haven't changed, but that algorithm has changed what it's approving and what's not approving. If you got a lower credit score, that DTI is coming down. If you got less reserves, that DTI is coming down. If you've got compensating factors like a derogatory, marks on your credit, that DTI is coming down. Depending on the program, there's still FHA loans that are getting up there and VA loans and the government backed stuff that's up in that 50% range. But for the most part, conventional stuff, you got to be really clean and you got to have a, big down payment to get it to approve up to 50. If you've got a 672 credit score, you've got some derogatory stuff on your credit report, you have very limited funds and you're only putting 3% down or 5% down, like that stuff, you're going to have be on the lower end, right? 43, 42% debt to income ratio. If you've got tons of reserves, big down payment, you can go higher. I mean, that's kind of how it works. And so there's not necessarily like a set guideline where it's like never going to work above this amount. You just need more compensating factors. And, there might be a 655 credit score with 3% down, it won't approve unless you pull that thing down to 38% or something. So it's really all based on a bunch of factors. It's getting tighter is the final answer. Sorry about that, Caden. That was... Oh, you're right, Eric. It was blinking because it's like, rate alert, rates are low. Come get it while it's hot. Yeah, it's like a carnival. It's trying to attract you to come get them. Looking to switch careers and become a mortgage broker. Currently working as an F&I manager in the auto industry. Any advice on making the jump would be greatly appreciated. What's F&I? F&I manager. All right. I'm going to try to give some advice, even though I really want to figure out what F&I. Fulfillment and something. I don't know. I have no idea what F&I is. But when you get into mortgage, don't use acronyms. Try to explain things as simple as possible to people because they probably won't know what you're talking about. So that was from your comment, the first piece of advice, which is real advice. I remember when I was first starting out, I was using mortgage terms. I was using acronyms. My wife was like, pretend like you're explaining this to my grandma and stop using big words because people won't understand it. Stop using acronyms. Nobody knows what you're talking about. So that's the first piece of advice. The second piece of advice is just learn as much as you can, as fast as you can, talk to many people as you can, and provide everybody you come across with as much value as you can, whether that's real estate agents, financial advisors, CPAs, anything like that. Like you want to be in a position where you're offering something of value, not just asking for business. Because I think that, for example, in California, I am one of 100,000 loan officers. So whenever I talk to a financial advisor or a CPA or a real estate agent, I'm one of 100,000 people that can do what I do, to varying degrees of professional, right? But I need to be coming from a place where referring business our way or doing business with us is mutually beneficial. If you're a real estate agent, doing business with us is going to help you grow your real estate business because we are going to provide the type of experience that people are going to talk to their friends, their family, their neighbors, their coworkers about, and they're going to refer more people to do more real estate transactions and get more mortgages. And, when I get referred from a CPA or a financial advisor or somebody like, I'm helping them shine. I'm helping that financial advisor be the resource to their client that they really want to be. If you're in a position where all your clients come to you and say, hey, I'm looking for a good this or a good that or a good this or a good that. If you're the first person they think about when they want to talk to a professional that can help them out, be the hub, right? A financial advisor should want to be the hub. So if they refer 6 clients our way and every single client is like, man, thank you so much. I appreciate your firm, Matt and his team. They knocked it out of the park. They really helped us out. Appreciate the heck out of you. They're more likely to continue investing with, continue working with, continue referring to this financial advisor that sent them to somebody who took good care of them. So do a lot of that. That's all I got for now. Work hard, be consistent, deliver on what you say you're going to do for people every time. All right. How much higher is the cash out refi rate compared to regular conventional rate? They're both conventional refinances, but the rate and term, no cash out versus the cash out is probably 0.25% different. And I can't give you a for sure answer because 60% LTV versus 70% LTV versus 75% LTV versus 740 credit versus 680 credit. All the different variables are going to change it. But in general, expect it to be about 0.25% higher. If you're going to 80% loan to value and you got a 680 credit score, the pricing is going to suck. If you have a 760 credit score and you're only going to 60% LTV, it might be close to what the rate and term rates are. Smoking hot. That's the short answer. for a mortgage broker, can they ask you for a credit card to check your credit score and also pay for the down payment of the home? If your mortgage broker is asking you for your credit card for a $31 credit check, you're talking to the wrong mortgage broker. It's funny because I see this in forums where people are like, do you charge your clients up front? We probably pull 150 credit reports a month. I've paid for every single one every single time. If you do business with us, we'll get reimbursed for it. If you don't, oh well, I'm out $31 times 150 every single month. If they're trying to charge you for it up front, it's probably a low budget operation you want to avoid, because if they're that stingy about that, what else are they stingy about, right? The down payment of the home, that's something totally different. That's going to go through an escrow company. Never send a mortgage company a dime ever. Some big online mortgage companies want you to do a $500 or $1,000 deposit. I don't even know what they call it, but it's basically like, we can change the terms on you. You can't go anywhere. We've got you by the Huevos Rancheros, and we want you to not go shop and get a better deal. Therefore, we're going to have you put a down payment with us. Bad, bad, bad. Oh, finance and insurance. So if you work in F&I in the auto industry, like a finance manager or something, those guys can make good money. I've done a lot of loans for some finance managers of auto dealerships. You're in the people business. You talk to people all day, every day. You talk with people in numbers. Just do that all day, every day. Do right by people over and over again. Business will come. Gregory, what's up? Good to see you. V-Quez, hello, hello. All right, Nezzy's Place, thanks for joining us. If a home went on the market for $131,000 and the buyer's offer $160,000, the mortgage commitment letter was for $152,000. Is that what the appraiser said was what the home was worth? No, I mean, the appraisal is going to come back and determine the appraised value. When you say commitment letter was for $152,000, that sounds a lot like 95% of the $160,000. So maybe it was a 5% down loan with the $160,000. So the loan was for $152,000. But depending on how the offer was written, and if there was an appraisal contingency or not, and they were going to, make up for a spread or not, the appraisal might have come in at 160, might have come in at 150. Yeah, I'm not sure. The appraised price and the mortgage commitment, we don't use those terms out in California. Mortgage commitment letter. But that just sounds like it's a $160,000 purchase with 5% down. If I missed something or you can clarify, let me know. Oh, interest rates fell, but interest rate for investment properties are high right now due to the Fed putting regulations. Okay. Part of that is true, where it wasn't the Fed, but it was, Fannie and Freddie saying only 7% of the loans being delivered can be investment property or second homes, but 4.85 on a 30-year is, I just did the scenario for my guy on here, and we got 3.370 with 25% down. Maybe your credit's worse, or maybe it's only 20% down versus 25, but still 4.85 probably would be worthwhile to get a second opinion. But who knows? Maybe your credit score is 680. Maybe you're buying a place for $100,000 with 20% down. And in that case, 4.85 might be the market rate. Different loan values, different credit scores, different down payments can all affect that. So if a mortgage broker asks, to, let's say, take a picture of your credit card to send to a bank for a mortgage along with other documents, is that fine? I don't think so. I would not send a picture of my credit card to a lender who's going to send it to a bank. It something doesn't smell right here. All right. This looks like a client who's ready to chop a bunch of years off their mortgage, paying $100 more and going from 29 years to 15 years. Look at that. Crack the whip on your hubby. Let's get rolling. Rates are doing good. Rates tick down a little bit, but who knows what tomorrow and the next day bring. So let's get it rolling. I'm glad you found us too. I'm glad you're joining us. I appreciate you. Appreciate everybody who's spending time with me on a Monday evening. I'm gonna cut this thing off in about 14 minutes, but I appreciate all of you. So thanks for that. Hi, do you think mortgage rates will go up in 2022? I don't know. That last video I put out, like, I just try to be as honest as possible with videos I put out, whether or not people think I'm a idiot or not. And I kind of changed my mind where I was like, for sure rates are going up by the end of 2021 with everything that's happened and with the Fed's continued ability to kick the can down the road. Like, I'm not surprised if rates stay the same or even go lower in 2021. I'm not saying that they definitely will. But I don't see them increasing like I did before. And I honestly wouldn't be surprised if we didn't see much upward movement in rates in the next 18 months. We probably will. It would be healthy for the market if we did. So I'm not saying it's not going to happen, but I'm just saying I'll be less surprised if it doesn't. So that's my honest 2 cents, maybe 4 cents. Good evening, Basilio. Saludos. Buenas noches. ¿Cómo estás? Gracias por venir y todo eso. All right. They did say if we did 25% down, it'll be around 3.8. So for 1% difference, we should do 25% rather than 20. Heck, yes. It shouldn't be that big of a difference, but if you've got good credit, we saw that one where it was 3.375. Probably 3.375, and then 20% is probably 3.875. You might be working with a lender who's just got fatter margins. They probably have an account manager, a branch manager, district manager, marketing team. They got all these different layers, right? And you're getting paid. You're paying everybody, right? Maybe talk to a mortgage broker and get a lower rate. Refinancing my rental. Why do they want proof of insurance for my other properties? That's just a guideline for conventional loans. And I understand that somebody who owns multiple properties, it can be a little exhausting, right? Mortgage statement, hazard insurance, tax returns, everything for every property you own. Trust me, we've done loans for people with 37 separate properties. You have to get that stuff for everything. And so it's just a lender requirement. And it's not like one lender can request it and another lender doesn't have to. Proof of insurance for every single property you own is just, it's the guidelines for conventional financing. And so that's your quick answer for that. Viquez is digging the Spanish. If you haven't joined live streams before, viví en México en el 2003 y 2004 y ha pasado 17 años, pero todavía lo hablo un poco. Yo soy Mateo, el hombre de hipoteca. I just don't advertise speaking Spanish because, unfortunately, I've got a bunch of team members that handle the mechanics of the loan. And if I've got Spanish speaking clients that only speak Spanish and they rely on everything being communicated in Spanish, it's going to be tough, right? Because I got 55, 60 deals in process. I can't speak to every single client every single step of the way. Back when I was just starting out, man, I had some of the coolest Spanish speaking clients that referred all their friends, all their family. I still serve them, still do what I can do. I just can't necessarily like market to that niche unless you guys find me some support staff that's bilingual. And then we get the bilingual team in here and we all work on stuff together. Maybe we have the Spanish department of Math and Mortgage Guy. I don't know. I'm growing so fast in so many ways that it's hard to figure out where our next division is. Right now, I'm looking at going nationwide. We shall see. Maybe 2022. All right, Michael, you joined the stream late. You're late to class, but I'm going to forgive you this time. Even if I might not pull the trigger for 6 months, it's still smart to do the full credit check, et cetera, with a lender to know where I'm at. I think so. If you go to my channel, I think I've got maybe multiple videos on it, but the one I send to clients is like the importance of the pre-approval. I think that, like, let's say you're buying January or February 2022, and for whatever reason, like, you're not going to buy before then, and you know it for sure. It's still a good idea to get fully pre-approved for a couple different reasons. One, you get to see what that process is like. Okay, I fill out an online application. I upload my last 2 years W-2s. I upload 30 days of pay stubs. I upload my 2 months of bank statements. I upload my ID. Okay, now they've got everything for me. I'm looking in this neighborhood where I know I'm going to spend between $400 and $450. I might put 5% down. I've got a little bit more than 10%, so I'm thinking about 10% down. I'm not sure. Now that we got you fully pre-approved, we got your credit pulled. I know exactly what I can offer you. 737 credit score, 5% down, 10% down. I'll show you 400, 425, 450. I'll give you an Excel spreadsheet where you can adjust the numbers. Look at 440, look at 420, look at 5% versus 10%. All this stuff is going to help you get really clear on, after I've looked at it, I've realized, one, I'm keeping the money in the bank. I'm putting 5% down. The mortgage insurance is slightly more expensive, but who cares? I'd rather have that extra 20 grand in the bank than a payment that's $120 a month less. Like, not a big deal on the payment. And looking at the $400,000 payment versus $450, I can buy in a much nicer neighborhood where I know if I turn this thing into a rental, I can get $2,200 a month in rent. It's going to be a great renter. And I like that neighborhood for at least the next 4 years while my kid finishes out elementary school, whatever the case may be. All these things, you get to learn all that. Then come January, you freshen up the pre-approval letter, slap in your 2021 W-2, the latest 30 days of pay stubs, the last 2 months of bank statements, and the application's there. We just repull credit. Now you're in a position where you're like, I know exactly the finance side of things. I'm fucking dialed in there. Just get me with a real estate agent who can find me 450 purchase price, 3.2 this neighborhood. Let's go. Game on. Like, that's why I think it's important. And I talk to people all the time. I don't mind me and my team and our time and our effort and our energy, my $31 to pull your credit report and then pay for it again when you pull it in January or February, because I know you're going to be that much more prepared, that much more educated, where when you go out shopping with a real estate agent, you're not like, I don't know, like, let me think about, like, I don't know the difference between 425 and 450. I don't know if I want to offer on this place, or maybe we'll go look at that place. Like, you've already got all that information up here and you're ready. You're just prepared. You get to the playoffs, you're ready. All right. Hopefully that answered it. I think it did. And there's videos on my channel that say the same thing, essentially. Is 2.5 points? Whew. 2.5 points? What's the credit score and what is the, I need credit score. I need loan to value. Loan amount, value, credit score. I'll give you a price check. Oh shit, closing Friday? Whew. This is where you're like, I don't want to tell somebody that they got A bad deal? Maybe it's not a bad deal. Maybe it's like high LTV, low credit. Send me the info. We'll look at it. I'll be easy on you. 2.5 points is a lot of friggin' points. A lot of points. Gracias. Man, I really need to just sharpen up my Spanish and just keep talking Spanish. Oh! 800 credit score? Basilio. The good news is 125K loan amount, 2.5 points is not a lot because it's a low loan amount. But still, I think that's a lot. I think that's a lot of points being investment property, Basilio. What state are you in, Basilio? 125 loan amount. Said 75 loan to value. So the house is worth about 167. All right, refinance, cash out. All right, big bucks, no whammies. I just put it in the pricer. I hope. Oh my gosh, Basilio, I can't do it. See, here's the thing. There's not a lot of lenders are like looking to do these low loan amounts. So some of them are just charging a lot. Basically, I can get a better rate with no points at all. So the bad news is, well, do your thing, Florida. All right, happy to help, Maria. A bunch of different variables go into that, right? Like if you're working with a lender who's a fellow broker, and I see that, I'm like, I'm offering the same stuff they are. You've already got everything dialed in with them. They've got a relationship with your realtor. I'm just going to say stay put, right? If you're pre-approved with Movement Mortgage or you're pre-approved with, Summit Funding or something, I'm like, holy crap, like 3.25? Really? I can get you 2.72. Then I'm probably going to tell you we can help you out. But, yeah, we're happy to give you a quick second opinion. Battles, how do lenders check your credit score and if you have money to pay for the down payment? You fill out an application. You basically sign something that says, I agree to let you check my credit. And then you provide proof of funds, last 2 months of your bank statement that shows where your down payment's coming from. All right, pretty okay. It's been 17 years, so you can't blame me. But back in 2004, I was really rapping in Spanish. All right, VQuez is 100% with me because of the Spanish speaking, probably, right? That's why you'd use us in California. Yeah, you're definitely like overthinking. For most lenders, like 716 above is all the same. And I gave this example to somebody else. Like number of credit pulls definitely affects your credit score, right? And so if you have 9 pulls in the last 6 months versus somebody who has 5, like that's going to affect your credit, but it's going to be so minute. Like I had 18 inquiries in the last 12 months. That's what my credit report said. And I had a 790. And similar to you got over 800. I could pull your credit and you can get it pulled 4 other times. It's going to drag you all the way down to 787. And you're still going to be in the top tier no matter what. So if you just get it pulled once from a lender, maybe 2 months from now, you think about opening a Home Depot card to get 10% off. and then you pull it again in January for refreshing your credit pull, or I mean your pre-approval, you're fine. You're overthinking it, brother. But you already knew that. Okay, piggybacking on his question, how does doing so affect his FICO? Not very much, because it's always looking at the last 12 months of pulls. So let's say that like we pull it in July, and between last July and this July, Mike's got 9 pulls. And then he doesn't do much for many months. And then we pull it in January. Now we're looking at January to January. And in that same 12-month period, he's got 8 pulls. His credit's going to be better, not worse. And that's such a small piece of it. I did a video on, does pulling credit affect my credit? I did a YouTube live probably 14 or 15 Mondays ago with Sam Parker from My Credit Guy. It doesn't affect people's credit as much as they think it does, especially somebody with an 800. If you're on the brink of 682, 678, and like you're scared, I understand you then. If you're 800, don't even talk to me about it. You're good. Nice. Okay. Oh, so I wonder if cash out. Okay. Yeah. You're winning. You did a burr. I'm proud of you, Basilio. Don't worry about the fact that like it was a little bit more expensive than maybe it could have been or should have been. Truth be told, they locked it, 30 days ago, maybe, if you're closing Friday. And so, yeah, forget about the fact that it wasn't the best deal in the world. The fact of the matter is you bought a house, you flipped it, you got all your cash out of the deal. You're going to go do more deals. That's one thing that I think I need to do a future video on, is like people are so hyper focused on like the very, very best deal. And they'll literally spend hours and hours and hours on that, but won't spend time researching real estate investing or other stuff that has way more upside and way more ability to scale their net worth. They're like spending 57 hours analyzing every single mortgage offer that's ever been known to man. So you're winning, bro. I'm on your side. You're good. All right, Scott, we touched on that earlier, and my answer was it's about 0.25% higher, but it can be less and it can be more based on credit score and based on loan to value. If you're a 680 and you're going to 80% cash out, your terms are going to be bad. If you are a 790 credit score and you're only going to 60% loan to value on a cash out, the terms are going to be smoking, really close to what it is on a rate and term. All right. Overthinking choosing a lender. Found a realtor through a reliable source, actually the same source I found you through. Depending on yeah, that's true. I mean, I agree with your realtor in that having a realtor lender that are connected and working together is important. And if you're placing offers on properties in any market that's in any way competitive, a good lender is going to be essential, right? I truly feel that when I'm reaching out to listing agents and buttering them up and telling them, listen, that's all we do is close loans all day, every day. I've got this first person fully pre-approved, W-2 income. We've done the verification of employment. We've pulled credit. I verified assets. When we send out a pre-approval letter, trust that we have everything. We're busy enough. We're not sending out pre-approval letters for someone who's not willing to go through the full pre-approval process and get pre-approved with us. Saying that to a listing agent with conviction, like I just did, gives them that, all right, cool. We found someone we know is going to close. I'm going to go like relay that to my seller, and they're going to be excited. Like this deal is going to close. And so that's what you want in a lender. And depending on what market you're in and where you're submitting those offers, if it's I don't know, is it local? Is it California or is it out of state? Let me know. But here's my advice. I already looked at your next question. Wondering if I shop more lenders, see who gets me the best rate. Talk to like 2 lenders and look at their rates right now. and compare them right now and then decide A or B. All right, A, that's who I'm using. Use them to get as much information, education, and all that right now. Don't wait until you're in contract or submitting offers, or even worse, after your offer's been accepted, and now go, okay, now where am I going to find the best rate? Okay, I got to call A, I got to call B, I got to call C. Oh, what about D? What about that one I saw online? What about that advertisement? Don't do that. That is like the number one no-no, not for me or for the other lender, but for you. It just creates frazzle-dazzle purchase experience that you don't want. Compare lenders on the same day so you know what the terms look like. Talk to both of them where you say, Matt and his team sound great. Joe and his team, I don't know if they really know what the heck they're doing. They seemed a little discombobulated. It took them a week to pre-approve me. Sally and her team were on top of it. Like, she's knowledgeable. She knows like this market inside and out. Like, just talking to her, I got smarter on the phone in those 4 minutes. Let that be a factor as well. And then decide, okay, Sally and her team it is. And then just don't look back, because if you compare prices today, the rates are going to get better, worse, better, worse, better, worse, better, worse, better, worse, better, worse. You're an overanalyzer by nature. You've already established that, right? And so you're going to drive yourself bananas over the next 77 days before you get into contract, or 142 days or 186 days, and looking this lender on this day, this lender on this day, this lender on this day. Don't do that, right? Find a lender you like and trust. Compare prices if you like, and say, okay, this lender was better than those two on this day, and they sound like they know what they're talking about. I'm using them. And then after that, just leave it alone. I think that's my best advice to you. Oh yeah, you're going to close on Friday? By all means, dude, close that baby up. Get your capital back. Put that stuff back to work. You want that. You want the velocity of money working on your on your behalf. You don't want to. You don't want to have to go back. What company did you get that rate with? That's who you want to avoid, right? Metro DC. I've got a referral partner in Florida I can refer you to, Metro DC, if you're looking in Florida. Which let's pop it up right quick. If you're looking for a broker in a state that's not California, where I'm licensed, greatmortgagebroker.com, quick form. It'll connect you with a lender in that state. They'll take good care of you. They're a low margin nationwide broker who's going to find you a smoking deal. Rest assured. All right. Let me jam through some of these questions in the last 7 minutes. Dun, dun, dun. Where did I leave off? All right. Caden's trying to get in some investment properties. Basilio. Caden's got some of my swag. He's got Mike's book. He's ready to rock and roll. I appreciate you. I only know how to keep it real. The good news is when you're your honest, true self online like this, either people like you or they don't. So the people that contact me are like, I think you're my type of dude. I like you. Let's do business together. If you don't like me, you just don't call me. All right, there we go. Basilio is going to connect with you, Caden. Shoot him an email, cyberinvestorflorida@gmail.com. Good to see that you're still able to get the type of deals, Basilio, where you can refinance, pull all your equity out, for a lot of the investors that are, been in the game for a little bit or know about that BRRRR strategy. That's infinite returns. When you can pull all your equity out of a deal and be in a 30-year fixed rate mortgage sub 4% and rinse and repeat with that same capital, you're going to win. Al Smith, UWM's tech is light years. When you use UWM as a mortgage broker, it's like working for a lender from the future. And that wouldn't be like as dramatic as you would think working with a lender that's got 2025 technology, except for that most lenders, when you log into their systems and you use the technology they're using, you're like, holy shit, I'm in 1990 right now. And you think you've gone backwards in time because because all their technology is so old and outdated, and the systems they use are literally like 1990s type of stuff. I think I've gone into a time warp. And then you use UWM and you're like, oh, that's why they underwrote the deal in 4 hours. And I got clear to close after 7 business days. So yeah, they're that much better. That's why they're going to do 300 billion in closings this year. And I'm going to help them out by doing 100 million or so myself. How much do I need to save besides 20% down payment and closing? Well, depending on what type of loan you're doing, if you're doing a jumbo, you might need some reserves. In general, I think it's good practice to just have some money besides your 20% down payment and the closing costs available to you. But, you know, it's really personal preference. There's some people that, let's say you buy a $500,000 property, you put 20% down, so it's $100,000 plus about $8,000 in closing costs, prepaid escrows, those type of things, right? You might be able to get a loan with that $108,000 down and zero money in reserves. I personally wouldn't recommend that. I think you might want to have $10,000, $20,000 in the bank just as emergency fund, but you may not need any more funds to necessarily get approved. Leah Lozano. I'm glad you're finally working with you after all this time. Straightforward paperwork. No trust note if you got an appraisal waiver, we should be able to slam that baby in like 3 weeks. Because if you got a straightforward deal, I'm gonna put a gold star next to your name, Leah. Make sure the team closes it nice and fast for you, because I want you to come on here and tell everybody what a great experience it was. I think 30 days is like the absolute max. With an appraisal waiver, I think I'm reading no trust no with appraisal waiver. I think I'm reading appraisal waiver. If it's no appraisal waiver, probably closer to 30 days. If we did get a waiver, probably 21 or 22. The quicker you are, the quicker we are. I can tell you that much. So get in gear. When Laura asks for something, get it back to us as soon as possible. One with the heart of a teacher, says one of your YouTube colleague. All right. Oh, are you calling Ramsey my YouTube colleague? I don't know if I agree with much of his most of his advice, especially when it comes to that. But if I resubmit my file, I'll lose my rate. I got 3.5 for refi cash out. I'll probably get a higher rate if I talk to a mortgage broker. I don't think you're getting the best rate. But you can't keep an expired rate. Shoot me a message, matt@mattthemortgageguy.com. I'll point you in the right direction. Depending on what state you're in, depending on what you're trying to do, you might be better off just going with somebody new. Follow-up question is going to be, why did it expire? Were you dragging your feet? Tell me the truth. My wife and I sold a condo last year, and we are renting. We're well qualified. Yeah, you can buy an investment property 20% down. For sure. Do it. Mark McDonough, what's up, bro? I think you were live at 5:30. You already done? You didn't put in 2 hours? Wow, it's 7:45. I got to get the heck out of here. Good to see you, brother. If you're looking for real estate stuff around Sacramento, Mark McDonough team, Sacramento Real Estate, check out this guy's channel. Great stuff. If you like cool houses and cool walkthroughs and things like that, then do it. This is the guideline that's not true for all lenders. No landlord experience, where you can't buy an investment property without landlord experience with no primary. There's lenders that will do this, and I think they might require reserves, but you can certainly do it. Be a renter and buy an investment property. I promise you can. It's just you got to find a lender that will do it. Oh yeah, my buddy Win the House You Love, Kyle Seagraves, for sure. He borrowed that from Ramsey. That's Dave Ramsey's thing. But I like Kyle a lot more than I like Dave Ramsey. All right, with that, I think I'm out. I got to the bottom of the questions. There's no more questions coming through. I appreciate everybody who joined this week and every week. Every Monday, 6 p.m. Pacific Standard Time. Any questions you got, I'm happy to answer them. I appreciate everybody that's here each and every week, asking all the questions that keep me sharp, asking all the questions that not only serve the person asking them, but serve everybody watching. I appreciate you. Good night.